Hey traders, welcome to Charts and Coffee. Hope everyone is having a good Tuesday morning. We are winding down the month as we go into basically a week from today. We'll be trading into October, which means we're seeing the early signs of sector rotation. We're seeing a lot of early signs of end of quarter reconsideration. I don't like the word rebalance. It's a reconsideration. If you're thinking about what any kind of money manager, anyone with a significant amount of dollars under asset, they're going to ask themselves, do I want to be positioned the way I was in Q3 going into Q4? Do I want to be buying at higher highs, or can I take profit in some of those outperforming sectors and put them to work in places that have been largely lagging as we wound down the quarter? And that is what we're seeing. It's that type of reaction that we're starting to see more and more of. And probably the two most obvious places are two of the absolute weakest sectors that are part of the major averages, and that's energy and metals and mining finally starting to move higher after a pretty prolonged period of lagging behind things like utilities and staples. And not that I want to stop with utilities and staples, but one of the things that I've been mentioning is that the defensive setups that have served us so well through August, through September, we're starting to see, I don't want to be quite so committed to those sectors almost alone. In fact, we've been focusing on healthcare, staples. Actually, I can just show you all. So once a week, definitely once a month, what I like to do is I jump into, this is TradesViz, and I'll break down that month's worth of swings. And actually, this is the month of, where's my drawing tool? Okay, this is the month of August. So these are the swings that we did in the Sector Secrets Mastery in the month of August. You can see that there. So what I do is I upload the Excel files, and then this is TradesViz. I know my clock is covering it. If you're curious what this is, again, this is just what I use. There's a lot of great tracking software, trade tracking software out there. I just happen to be using TradesViz. And what I'm able to then do is take a look at the individual trades. Here we go. And I can take a peek at what most of my focus was. So take a peek here. This is really what we want to focus in on right here. I'm going to make this a lot bigger. There we go. Okay, now everyone can see it pretty clearly. Look at what we were in for most of August. A little bit of bonds, staples, gold, healthcare. Gold, right? Newmont Mining's a gold miner. Staples, healthcare. We did an RTX trade. RTX is still behaving pretty good. Staples, healthcare. So you see, that's what really worked that's what really worked well in August. I mean, obviously, so if you're wondering, Rog, what size account is this? This was the account where I'm doing a lot of the examples and testing and trading for the class that's coming up on October 5. The webinar for it, by the way, is tonight. I know, can't believe it's already here. So what I did is I kind of opened a middle of the road sized account, not really small, not 35,000, not 100,000, just something in the middle, or I could actually have a productive month trading this sized account. So 18.5, it's still subjected to the pattern day trading rule. There's still a pretty tight budget on things like this. And for those of you that may already be familiar with the basics, and I do mean the foundational basics, right, of the Holy Grail, right? This is not exactly a Holy Grail. You know, the class that we're going to do, the examples that I'm going to show, is once you've understood some basic terminology. And if this is terminology that you're not thinking with at the moment, please make some time to head over to the webinar. By the way, you can register at simplertrading.com/reliable. Now, if certain verbiage like how much of my account am I going to risk? We call it desired account risk, right? What is your desired account risk? What is the max? What is the top? of risk that you'll accept for your account. All right, then you're going to go to the next level. Does that then dictate, and it should, how many contracts you trade? Right, so they're a connected conversation. So when folks say, well, Rog, how many contracts should I trade? There's a formula for that, right, based on the account size you have. So we have, call it 1,000 members. Do you think all 1,000 members in my mastery have the same account size? And do you think maybe a $10,000 account is going to trade differently than a 12? And a 12 may be different than an 18, and an 18 different than a 30. They're not going to trade any different. They're going to size different. And these are little things that when we're on our path to account growth, which is what we're all looking for, right? When we're on that path to a steady account growth, reliable, consistent, whether it's small or medium or large, there's some holy grail basics that we start with, right? These are basics. But then as we understand basic lingo, we can start to then understand how to turn the dials and make a more custom approach to our position sizing, to our risk, and to our account growth trading plan, right? So it's not one size fits all. I will always start, and this is August, by the way, and this is where we are okay, so that's September. There you go. So here's September. So we're going to always start with those basics. And some of you might have learned a little bit about that from me over the past few years, because I've been pretty open about those really, really basic foundational concepts. How do we understand those? Like I mentioned, desired account risk. How does that determine contract trades? How many trades do you take in a trade, and how much are you risking per contract? So wait a minute, Rog, risk to the account and risk per contract? That's why you need to be at the webinar tonight, because I'll walk you through it. But here's where we are in September. So again, I said, all right, let's start all over again. Let's reset. Let's go back to 18.5 and position size based on what I am comfortable risking, right? Again, with an 18.5 account. So this is where I am so far. Now, September's been a lot easier to trade than August. Let's put that aside. August was a tricky month, but it was a positive month. September's been a whole lot more generous in terms of trade. So if you take a look, and I'm going to blow this up again so everyone can see it. Now we're starting to wander into a little bit more risk appetite places. Russell, industrials, consumer discretionary, still sticking with healthcare. Interestingly enough, some of my losses came in financials. Interestingly enough, financials did not do what I wanted them to do. I'm still sticking with some of the staples, but you see, we're starting to wander a little bit more into things like energy and IBM. Schlumberger was a loss this month for me. We're still sticking with some of the same narratives, but you see there's a little bit different. So that also begs another question. What are you trading? And we talk about this every day in Charts and Coffee. We definitely focus on that very heavily in the Sector Secrets Mastery. So the formula is, what are you trading? And then what kind of risk management and frankly, reward management are you applying to it? Yesterday in the Mastery, we probably spent, about 15 minutes talking about managing open trades, because a lot of times the dopamine junkie in our brain wants the next trade, the newest trade, what's new, what's next, right? I like that too. New trades mean new opportunities usually. But if we don't manage the ones we've got, like we have a long position in industrials. And so when we don't manage the ones that we have, right, all the great entries in the world won't mean anything unless we know how to manage those trades. So this is where we are as of yesterday in the Mastery. So we were very active, the first half of the month, and we're starting to rebuild those entries, because now we're post September 20. A lot of those options expired, or we just trailed out. This is where we sit now. Now, again, depending on your account size and depending on your comfort of risk, you will be able to trade a different number of contracts, but they're all part of the same formula, right? So again, if you've already learned a lot about the Holy Grail, this is not, today's conversation is not more of that, right? This is how do we take those basic understandings and begin to evolve, to improve, to customize that formula for account growth from there. And that's really the emphasis, right? How do we position size for account growth without being in a position to blow up our account, right? That's the flip side of it. And I have a lot of experience there avoiding blowing up an account because I've never done it. And it's part of that understanding of the formula. Most folks think account growth is big trades and big wins. And I think most of you know if that were true, then we'd all be trading very differently. We know that account growth is something that eludes a lot of traders, but we also know account growth is something achievable. But if we're heading down the wrong path trying to achieve it, we're just not going to get there. So that's what we've done so far in September. This is what's open right now. By the way, that's a loss. I did end up taking a loss on the Russell. Close that out. Notice what we're not doing. In fact, here's a really good formula. And I'm just trying to make sure everyone kind of sees where we're heading in this webinar tonight in a whole lot more detail. What are 3 things I can promise you that if you do, you'll blow up an account? Counter trend, right? Counter trend. And if all of this is starting to sound really, Rog, you're kind of reading my brain, you definitely want to register for tonight's webinar. So counter trend, you want to blow up an account, trade counter trend. You want to blow up an account, add, right? Add to losers. Whoops, it's not bouncing from where I thought. Let's buy again and again. Add, and it's always to losers, isn't it? Okay, so add to losers. Again, guaranteed way, guaranteed path to blow up an account. And the last one is, the phrase is max debit. What is max debit? Max debit is letting the option that you bought go to 0. So you want to guarantee you're going to blow up an account. 3 ways to guarantee this is it. So what's on the other side of that? And that's exactly what we're going to be talking about tonight. So I am super stoked about this topic because this is the kind of topic that for a lot of traders is what helps them turn the corner. It's not a new indicator. It's not a new secret squiggle. It's not some magic strategy. It's how do I take the things that I have right now that I like and that I understand and get them to work? And that's the formula. All right. So could not be more excited. This is a class that we've been wanting to do for a really long time. All right. And considering that so far this month and so far this year, gang, we're going into the 10th month of the year. 9 months, 6 out of the 9 have generally been bullish. This is the kind of year where you can grow an account. And when I hear a lot of folks struggling, I'm thinking, never has there been a better time to talk to traders who are looking at 2024, waiting for the shoe to drop, picking tops, being bearish, and missing out on probably one of the best years for account growth since likely 2020, 2021, right? 2022 was tough. 2023 was tough. 2024 has been a gift. So if it hasn't been, this is the formula that's going to help you start understanding how to not to counter trend, position size appropriately, and do the things that will lead to what we're all here to do, which is grow that account. So super stoked about that. Let's take a look at what we've got here this morning. Yesterday was very choppy. Yesterday was very wayward, not bearish, not bullish, just kind of a very hesitant move higher. We are rounding out the quarter. We are sitting in this post 50 basis point cut from the Federal Reserve. Options expiration wasn't bearish really at all. It was actually quite sedate for an OPEX session. So I know there's a lot of expectation, once again, for the shoe to drop. But one thing that you'll notice in both September and October is the trades were calls. I've been bullish all year. I think I had 1 or 2 puts. Go figure. They were both losers. So the call side's working. We want to stick with the long side. So as long as we can see the green candles, and as long as we can see the organization of the momentum, and this is another thing we'll get into this evening too. Rog, how do you know to be bullish? I've heard so much contradicting information. How do you know to be bullish? What on your charts is telling you that when we're moving higher and we pull back, that's not a reversal? That's a great question. And a lot of it has to do with understanding structure, the color of the candles, and focusing on those support zones, the gray zones on the hour and the daily time frame, and the green zones, if I'm day trading, on a shorter term time frame. So you've got to have a certain amount of knowledge, confidence in the zones that you're looking at holding in the environment that we'd expect higher highs or at least support in. Now, you notice I'm not going to talk about that in certain names that are still struggling. I think, Boeing comes to mind. This is where traders hurt themselves. You want to hurt yourself? You want to blow up your account? Here you go. Counter trend. This is a downtrend, gang, and it has been very weak for a really long time. Buy this, right? Start looking for buys and things like that at scale, meaning not 1 trade, but 10 trades. If you continue to buy, you're going to lose, right? So you might say, Rog, Are you telling me that with the red candles and a downtrend, I can find ways to get on the short side or with puts? Absolutely. It's just another zone that you're focusing on. And then the formula for position sizing, understanding what you're trading and the direction you're trading is so important. This is where you don't want to be buying, right? So there are a lot of great strength names out there. And again, I want to be very hesitant still with tech, and I want to be hesitant with semiconductors. But overall, we're starting to see a lot more risk appetite. All right. All right. So next up is, so the webinar absolutely will be recorded. Yes, if we're on the mic here at Simpler, it's being recorded somewhere. I can promise you that. You can register here at simplertrading.com/reliable. Again, it's 8 p.m. tonight, New York time, 8 p.m. Eastern. And I'll go into more detail. We're going to have a bunch of trade examples. I'm going to show you some of the testing and the results from the SPX testing I've been doing now for 6 months. What I've found that can be small, not just small account friendly, but contribute to account growth. So I'm super stoked about that. And let's see, questions. All right. XLE, would I avoid it? So, okay, here's what I would say. Look at XLE and first, here's a little bit of a sneak peek, all right, into the process and into what I do. What are the color of the candles? Now, these are something called the top tier candles. These candles are color coded. And this was, if I recall, it's such a blur now. Lorna Bot and I tested these settings for the candles, for what we call the multi-structure down here, for the top tier dots, for bot. Do you remember? I want to say it's 16 months. 16 months, gang. Not 16 days, not 16 weeks. It was over a year. It was closing on a year and a half, I think. It was well over a year, maybe not quite a year and a half. So we test these things through different types of behavior. And we test the settings, and we test as to whether if the candles are green and we have a certain series of green candles, are we more likely to see higher highs? If the candles are red and we have a series of red candles, are we likely to see more weakness, right? And then that also helps us determine, for example, you might say, Rod, this candle was green, but it was just one. Would I call that dominantly bullish or mostly maybe neutral and bearish? And you can see what happened. So right now, we're starting to see a little bit more sign, not super convincing. Back to that XLE question. Are we starting to see a little bit more bullishness that could be indicative of a move higher? Probably the most that we've seen since the end of July. So yeah, we're starting to see very slowly. Am I super confident? If I tell you there's 2 green candles versus maybe there's 10, isn't your confidence different? So 2 candles are definitely heading in a more bullish direction. Once the candles are green, I'm not going to be long puts or short anymore. But now I can start to see where the clarity is. Now, maybe, and this is also part of growing an account, maybe there is a stock within this group that looks better. Williams would be a great example of that. Maybe an individual holding an XLE. Maybe it's not even XLE, but oil and gas explorers. Maybe it's oil, or maybe it's oil services. That's where we want to think about where our best probability for continuation is. Continuations are always going to be best in a trend. So then the really big question is, how are you determining what a trend is? Individually, everyone here, right? Individually, how are you determining a trend? Do you have a objective on or off type way to say this is on this day? That kind of specificity on that candle, we now have a trend. And that's something that I know for me has given me a tremendous edge over the years. XLK does not have a trend. There's no sign of it right now, but it's bullish. And bullish and trend are not synonymous, gang, right? Bullish and trend are not synonymous. So if I think about being bullish versus a trend, think about this as well. What's your expectation for follow through? If I'm looking at XLP, which was a big factor in growing the account, isn't my expectation for follow through higher and something that not only has the green candles, but the structure that indicates an uptrend? Same thing goes for things like IBM. right? So what you're going to find is what we're trading in the mastery. And what I'm going to show you in the webinar tonight is not about where's NVIDIA going. Honestly, who cares? Now, oh my gosh, what happened to semiconductors? It's not a matter of finding a sector that we like or that performed in the past and waiting for it to do that again. It's a matter of finding things that are acting like they are the symbols of continuation now, right? And that's where things like IBM come into focus. So our watch list and what we trade are usually going to be very, very different. I mean, who's trading staples and utilities and consumer discretionary ETFs? Who's focusing on Coke and individual outperformers in healthcare? Not many people. Well, not unless they're watching the show, right? Not many people, because they're focused usually on what? Magnificent Seven, tech, the symbols that were performing, and they're waiting for that return to performance. In the meantime, we're watch list building. We're finding things that are moving now because the money doesn't go under the mattress, gang, right? Okay, so that's what we've got here this morning. Still quite bullish, more bullish in, say, S&P and Dow. NASDAQ's doing okay, but S&P and Dow continue to outperform. We are going into a sector rotation end of quarter. We're starting to see early signs of that. And I'll see you tomorrow, same time, same station. And then, of course, I will see you tonight at 8 p.m. Eastern for our webinar, simpletrading.com/reliable. All right, gang. Be good to each other.